Welcome to today's edition of the Statler Financial Radio Show. Your financial security is our business. Have a question for the team? Call today, 863-877-1188. That's 863-877-1188.
Welcome to the Statler Financial Radio Show with founder and president Philip Statler. I'm Stephanie Griffin. Philip has over 2 decades of experience in the financial industry, and he wants to help you have a stress-free retirement. Statler Financial Services uses their core retirement design, which focuses on creating a secure, complete retirement plan for you. You could give Philip a call at 863-877-1188. That's 863-877-1188. And you can go in for a free visit, a free sit down with Philip and talk about your retirement. Hello, Philip. How are you?
Hey, I'm doing good. Good to be back for this segment. It is, I don't know, I think you're throwing me some loops today on this one.
Well, this will be fun. We are talking timeless advice. Philip, is there anything, and maybe I'm springing this on you and I shouldn't, is there something that resonates from your parents or grandparents, something they may have said when you were younger? Some kind of timeless advice?
No, not that I can really, not anything I can really think
Can't
of.
think. Well, one that my parents used over and over again. And I wasn't a bad kid, but they did say this: you live under our roof, so you go by our rules. So that's one I heard a lot. So there's some quotes that just stick in your mind. It could have come from maybe a parent or grandparent, like we talked about, maybe a famous person who offered a bit of wisdom for you to hold on to. And some words of wisdom stand the test of time. Philip, let's go over some timeless advice and how it can relate to retirement. We all know Benjamin Franklin, one of America's founding fathers and inventor. He said, an investment in knowledge pays the best interest. How could this relate to retirement, Philip?
Well, I think he said that very well, right? I mean, when we think about it, it is the knowledge we gain because that is going to stick with us our entire life.
Right.
Whatever we learn, that knowledge, the little tidbits that we pick up here and there of knowledge, that is going to be really things that we can think back on in time. I know I have over the years.
Yes.
Have been able to think back, not just over education as far as schooling, but bits and pieces of information that I've picked up from people along the way that I've been able to continue to use and to bring forward to help me even today. And so I think, how does that really relate to retirement? Well, it relates to retirement in the fact that you need to have some knowledge. You need to have some understanding of where you are, what you're trying to accomplish, and how to get there. So don't do this though, right? I get this a lot. People soak in a lot of knowledge, but they don't do anything with it.
Right.
And that is not paying you any interest whatsoever. A matter of fact, you're probably losing money in that case. So where it does pay off, though, is where you do enough research and enough reading and investigating to kind of understand, what's happening with your investments, with your retirement. I don't expect anybody to understand how a mutual fund works or how this stock works or that type of thing. That would be... if you wanted to, that'd be great. But most people, that's going to be way above
right.
what they want to understand, right? So, but I think understanding and having that knowledge of what retirement's going to look like for you is really the first step in trying to get to that point in your life when you're ready to retire.
So Maya Angelou, you have heard of her, haven't you, Philip? You've heard of Maya.
I'm going to be honest. I have not.
You have not. Okay, that's
At
okay.
first, I thought that was a Michelangelo. I had to read it 3 times, and that wasn't right. So
That's okay. That's okay. Well, she's famous, but if you don't do poetry, I can understand that. She's an award-winning poet and civil rights activist. She said, "You can only become truly accomplished at something you love." And I love this quote. Don't make money your goal. Instead, pursue the things you love doing and then do them so well people can't take their eyes off of you. I love that. What do you think, Philip?
Well, I will say that I've used that myself because people always say, hey, when are you going to retire? I'm never going to retire. I love what I'm doing.
Good.
It's not work to me. It's helping people, and that's been instilled in me since I was a little kid. You talked about at the very beginning something that hits you. Well, I can remember my dad telling me, there's nothing better than somebody giving me a compliment about my children.
Yes, I agree. Yes.
And so, always be willing to help other people. And so that was something I did grow up with that in my background and being very helpful for folks. But I think this is really talking about if you're doing something you love, then it's not really work. Right. And so I've seen this play out to people's advantages, which is good. They're doing the things they want to do, they love to do. And so that's really not work anymore. And work really associates with money, right? Money is,
Yes.
if money is your goal, then you may not be doing something you love if you're just trying to get that golden apple at the end. Right.
Mm-hmm.
So I don't think that's the key. The key is to do stuff you love to do. And that way it'll come back to you tenfold,
Right.
in what you're doing, from that standpoint. And I think that's really, what she's saying there in that quote is, don't make money the goal, do something you love and do it well, do it with excellence,
Right.
so that people count on you and really enjoy watching you do that thing that you're good at.
That is, I love that. That's great. And we've been kind of trying to teach our son that. We have two boys. Our other one's a little older and out of the house now, but our senior in high school, he is getting ready to go to college, but we keep telling him, do something you love because, you don't want to wake up every morning miserable, not wanting to go into work. So hopefully he listens to mom and dad's advice. Paul Samuelson was the first American to win the Nobel Memorial Prize in Economic Sciences for his fundamental contributions to nearly all branches of economic theory. He said investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas. Can you explain what he's talking about, Philip?
Well, so it's kind of like the tortoise and the hare, right? Slow and steady wins the race.
Right.
And that's what he's saying here. Watching paint dry, that's not exciting. It's boring.
It's very boring.
And so really your investments shouldn't be exciting. You shouldn't be glued to the TV wanting to know what happened in the markets today and think that that's what happened to your investments.
It's hard to be patient.
Yeah, because the two don't always match up.
Right.
I had this discussion with a client the other day, who I had to kind of talk off a ledge, right? Because he was like, man, the markets are just getting hit and beat up right now. And I said, yeah, but look, your one portfolio's up. And so people forget, right? That what you see on TV doesn't necessarily equate to what your portfolio is doing. Now, sometimes it does, but not always. And so that's the key. If you want excitement of being a day trader, take a little bit of money on your own and go do that. But don't put your investments and your retirement assets into that kind of risk bucket. Don't gamble with those. You want something slow and steady that's going to get you to where you want to be at the end. I think that's the key with that. And really, Stephanie, that's why I kind of developed my core retirement design to help people really design that retirement they always dreamed of, to put the pieces together, to look at the main aspects of retirement when we talk about risk, taxes, and everybody needs income in retirement. And those are the three key aspects of our core retirement design. Folks can give us a call at 863-877-1188. That's 863-877-1188 to spend 30 minutes with us on the phone, figuring out how that might best help them.
And let's go ahead and talk about how they can also text visit as well with that same number, 863-877-1188, if you'd like to go in and talk to Philip Statler. Statler Financial Radio Show. That's what we're doing right now, talking about timeless advice. The first president of the United States of America, George Washington, once said, "We must consult our means rather than our wishes." Philip, what can this say about setting a budget, the big B word, to cover all your anticipated expenses in retirement?
Well, I think what he's talking about there is, look, we need to make sure that what we have coming in is covering our expenses that are going to be our day-to-day expenses. And hopefully we've planned well enough that we can do those wishful things that we want to do in retirement as well. But we need a budget to make sure that we don't overspend our retirement assets. I was listening to somebody the other day, and they were dealing with a client that was taking out like 20 or 30% this year out of their retirement accounts. And he said, 2 years, you're going to be broke. That's what we don't want to see happen to folks. We want to make sure that they're being responsible for the money that's coming out of their accounts.
So let's stick with politics with our conversation. I think we have time for one more question. This comes, or one more timeless advice. This one comes from Eleanor Roosevelt, who was influential during her husband Franklin Delano Roosevelt's presidency. She said it takes as much energy to wish as it does to plan. That's very, very bright. I love that. Could this relate to retirement planning as well, Philip?
It does. I mean, here's the deal. A lot of people hope, wish, whatever, that they're going to have a great retirement. But it takes work. It takes some planning. It doesn't just poof and happen. We need to have a plan in place to make sure it ends up the way we anticipated and the way we expected. And that's the key, I think, is it is vitally important that you have a plan in place as you get ready to head into retirement. Even if you've already retired, it's not too late to put a plan in place. Hey, I want to circle back real quick because I didn't finish the comment that I wanted to make.
Yes.
When we talked about doing things you love and don't make money the goal, I want to put one caveat in there.
Okay.
Now this is for our young folks, right, that are going to college or think they're going to go to college. Look, find something that you truly can. If you're going to take out student loans, make sure that whatever you do is going to be able to pay those student loans back. I'll give you, for instance, I had a client, granddaughter, loved dance. She went and got a degree in dance. And she was very, very good at it. But she ended up with over $100,000 in student loan debt.
Oh, my gosh.
It's very hard with that degree to service that loan debt. So just use a little common sense when you're getting educated for your career, and make sure it's something you love, but make sure it's something that's going to really pay the bills. Okay.
Oh, very good. Very good advice from Philip Statler for sure. Give him a call, 863-877-1188. And the Statler Financial Radio Show will be right back. Turn your plans of yesterday into yes today. Don't wait another day for a routine checkup of your retirement plans. Call Statler Financial Services, 863-285-3815. That's 863-285-3815.
Surprise parties can be fun. Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Philip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Philip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Philip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit statlerfinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC registered investment advisor. Time to retire right. This is the Statler Financial Radio Show.
Welcome back to the Statler Financial Radio Show with founder and president Philip Statler. I'm Stephanie Griffin. Thank you so much for listening today. Market volatility isn't a question of if, but when. But here's the truth. With the right preparation, market corrections don't have to derail your financial future. Philip, let's get started with fundamentals. Why should every investor, regardless of their age or portfolio size, have a plan in place for market volatility before it happens?
Well, I think a couple of things. One is, I think you said it just a minute ago, it's not, if it happens, it's when it happens, because we know historically it's going to happen. We just don't know when. So a couple of things that we need to make sure that we are ready when it does happen. Emotional decisions during downturns can be wealth destroyers. We saw that in 2008, where people bailed. When we call it capitulation. That's when everybody starts bailing out of the market instead of holding tight because they just can't stomach it anymore. So emotionally, you need to make sure that you've got that tied down. How much are you willing to hang in there? Corrections happen on a regular basis. Now, correction is when the market drops by 10% or more, but less than 20%. 20% or more, we start to call that a bear market. It's more than a correction. So they're going to happen on a regular basis. And so having a plan helps eliminate those panic-driven mistakes. And that's where having that retirement income plan in place, knowing where your income is going to come from, and making sure that it is a little bit more protected than the rest of your accounts goes a long way to helping you weather those storms. So preparation allows you to see opportunities too, not just the threats that come when the market declines.
And if you'd like to talk to Philip about your portfolio, you can do that by calling 863-877-1188. That's 863-877-1188. And yeah, we've seen it happen. We've all seen it happen. Investors who seem to have everything figured out suddenly make devastating mistakes when markets get rocky. So what are some of the most common and costly errors you see people make when they haven't properly prepared for market volatility?
Selling at the bottom to, quote, stop the bleeding. At that point, if you're at the bottom, you might as well ride it out. A caveat, right? As long as you've got a well-diversified portfolio. Now, if you're in all, penny stocks or something that's very, very risky, well, that's a different story. I'm talking about people that have a well-rounded, a well-balanced portfolio. Then those companies are good, solid companies. They're going to weather the storms like they have for years. So that's one. Moving everything to cash and missing the recovery. I got to tell you, I saw this last year. Stephanie, I had a client come in and say, look, I'm concerned about the election. I'm concerned about what's going to happen. I want to get out of the market. I want to go to cash.
Oh, wow.
I said, oh, okay. So I let him think about it for a little while, and I gave him a couple other scenarios. Mm-hmm. Why don't we liquidate half and leave half invested? Well, he called me back and said, no, we talked about it. We just want to liquidate everything. Let's put it in money market. Let's see what happens with the election. And what happened? The election hit, markets bounce. And it's tough to get back in to the marketplace. So just an example of where we see it happen. Abandoning your diversification. Like I said earlier, all this relies on having diversification within your accounts. And that's a big deal. And then letting fear override your long-term strategy. the younger you are, the easier this is because you got a lot of time left. The closer you get to retirement, that's why we need to start making adjustments to what our accounts look like before we get to retirement. I would say 5 years before retirement, we need to start looking at those accounts and making adjustments so that we don't have too much risk in there for retirement time.
Well, some investors think they can actually wait until they see trouble coming and then make adjustments. I don't know about you, Philip, but I don't know how to time the market. And I know that's pretty difficult. So what makes it so challenging to predict when volatility will strike or when stocks will go higher? And why is waiting until it happens such a risky strategy?
Here's the deal. Nobody knows, what the market's an emotional machine. A lot of times it's emotion that drives the market. Yes, the traders out there, the people that do this for a living, they're looking at, either charts or technical analysis or fundamental analysis or all those things. But you can throw those things out the window when emotions hit. And so we don't know when the next thing's going to happen. Right. And just because the markets are down doesn't mean the stocks in your portfolio down. You may have stocks that are, counterproductive. They may go the other direction. So you just don't know. Just because the market's down doesn't mean your account's going down. I see that all the time. And so you just need that to make sure it comes down to those couple things, Stephanie, making sure that the risk in your portfolio overall matches up with the risk you can handle. And we saw this back in 2008, where people thought they were a moderate investor. Unfortunately, a moderate portfolio back then lost 15 to 20%. That was way more than the moderate investor thought they could lose. And so they figured out real quick they weren't really moderate investors. The problem is they found out too late. We want to find out ahead of time what kind of investor you are so that we can pick the right kind of portfolio. And that helps with that whole process.
You are listening to the Statler Financial Radio Show. You can go to his website, statlerfinancial.com, find out more about the services that they have. And you can also give them a call, 863-877-1188. Sit down with Philip, talk to him, have that free consultation. 863-877-1188. Now, Philip, you've helped a lot of clients prepare for and navigate through various market cycles. For someone watching who's thinking, I know I should prepare, but I don't know where to start, how do you help people build a comprehensive volatility preparation plan? That's a mouthful.
Well, that is a mouthful, and but it's a good point to make. And I guess really, Stephanie, it starts with understanding the amount of risk you can handle. And we've got a couple tools that we use here at Statler Financial to help us ascertain what that number is for you on a scale of 1 to 100. What does that look like for you? And so we plug that into our system and build our portfolios around that. And we can show you, look, based on your risk number, if we had another 2008, here's what it would look like for your portfolio versus what your current portfolio looks like. If another 2008 happens, here's what your current portfolio would look like. So sometimes that helps people understand what the differences are between different portfolios by, when we run those big booming situations, what could happen. And so that really helps them get a better picture of risk and how it affects their portfolio.
Since every investor has unique circumstances, risk tolerances, and goals, can you walk us through the kind of personalized volatility assessment you can provide for clients?
Absolutely. And that's really our core retirement design, Stephanie, is that process where we'll sit down with folks and make sure and actually run a risk analysis on their current portfolio to see, okay, what is the risk in that portfolio on a scale of 1 to 100? We run you through an analysis to determine what your risk score should be. And then we compare the two. if your risk number is a 52 and your current portfolio is at 75, well, there's a big mismatch there. And so we need to make sure that we get on the same page, that our portfolio and our risk tolerance are on the same page. And that's really what we strive to do here at Statler Financial.
Philip, can you walk us through the process at Statler Financial Services and tell us a little bit more about that?
Absolutely, Stephanie. So we start with a no obligation, a 30-minute phone call. That 30-minute phone call is really where you can ask us questions. We'll ask you questions. We want to see where you are and what your ultimate goals are. And if you're on the right path to get there, God bless you. We're going to let you know that, or we're going to encourage you to do a couple things and set you on your way. If I see a place where I think I can help you, I'm going to let you know that. Hey, look, I think that we could help here, or I think you're off track there. And then we would sit down together in the office and go over, or by Zoom. I can do Zoom meetings too. And we'll go over where you are and collect the data that we need, statements, tax returns, all those things to put together a financial plan for you. And by doing that, then our next step really is we get to work and we run the risk analysis on your current portfolios. We also then get what your risk assessment looks like. From there, we look at the fees and expenses you're paying inside of there. We move on to taxes. We prepare a tax plan and see, if there's any opportunity for you to be saving in the area of taxation. And when I say saving, I don't mean saving just for today, but I want to save you a lot of money over your retirement lifetime. And so sometimes, Stephanie, that means we pay a little bit more tax today and tomorrow in order to live tax-free the rest of our retirement. So that's the second leg of our planning process. The third leg is putting together that income plan, showing you where the income's going to come from, how we're going to get the income we need. And then the big number is, how much income do you have to spend? We'll come up with all of those things in the third leg of our core retirement design. So when you're done, you have a risk analysis, a tax analysis, and an income plan, all put together for you, ready to go. And so that's really our core retirement design. Again, we want to help people have the retirement they always dreamed of. It's a simple phone call to get started. Give us a call at 863-877-1188. That's 863-877-1188 to schedule your 30-minute phone call. Or you can go to my website at statlerfinancial.com. There's a link there that you can click and schedule a time as well. I look forward to speaking to you soon.
And we will be right back, and we're going to be revealing specific strategies for building your volatility defense system and the critical mistakes that could leave you vulnerable when markets turn turbulent. The Statler Financial Radio Show will be right back.
Needing a second opinion on your retirement plan or to see if you're paying more than your fair share to Uncle Sam? Schedule your complimentary visit today. Text VISIT to 863-877-1188. That's VISIT to 863-877-1188.
Surprise parties can be fun. Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Philip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Philip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Philip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit statlerfinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC registered investment advisor.
Welcome back. It's the Statler Financial Radio Show. Let's get into the specific strategies that can help protect your portfolio and your sense of reassurance. Philip, what does a well-structured volatility defense system actually look like? It sounds so stealth or something, I don't know. And how can it help protect investors when markets become turbulent?
Well, I think one is, your core holdings need to kind of have some stability. So you've got a core portfolio that's going to kind of be the bread and butter that's going to be there, all the time. And then we have growth positions to help combat inflation. The one thing I know is as I talk to people all the time is, well, I don't want to be in the stock market. I'm going to tell you something. When I have 90-year-olds that we have at least 10% of their portfolio is in the market. Why? Because it helps combat inflation. And we know inflation has been pretty bad here the last few years. And so this is one area that can help offset some of the inflation. And then, having some protected income generation strategies. There are, dividend portfolios that you can put together that would have some specific, allow you to throw off some specific amount of income. There are annuities out there that will give you an income stream for the rest of your life. And those can be beneficial. That way you don't have to worry about the ups and downs of the market. If they go down, it doesn't matter. Your income's not going to be affected. And then the last thing I think that people, I think they know they need to do it, but they want to retire early, so they don't care. And that is, folks, you need to optimize your Social Security benefits. You really need to do the math to figure out when is the best time for you to take Social Security. I understand if health is an issue and you need to retire at 62, but there's a lot of folks out there retiring at 62 or taking their Social Security at 62 and still working, that it is not a good idea to do that. And we need to look at why it's not a good idea. And we need to look at how can we do better and protect our spouse. And there's a lot of things that go into optimizing Social Security. It's not just the dollar amount that's there when you start drawing. And those are the things that we look at and talk about when we start talking about optimizing your Social Security benefits.
Now, there is a fascinating psychological component to market volatility. How can investors prepare themselves mentally and emotionally for the inevitable stress that comes along with the market downturns?
It's hard to really, kind of get that psychological component put together. Because so many people live in fear. And so when the market starts to drop, they fear creeps in and starts to really take effect, right? So I think if we look at a couple of things, one is understanding your true risk tolerance before the crisis hits. Like I said earlier, people in 2008 found out they were not moderate investors too late after their accounts were already down 15, 20%. And so understanding what your true risk tolerance is before a crisis hits is a huge deal. It really, truly affects how you should be investing your money. Other thing is maintain historical perspective on the market recoveries. I mean, if you look back, I can go back to 2000, right? One of the first major bear market I went through as an advisor. And what we have seen both in 2000 and 2008, if you had a well-balanced portfolio, well-diversified portfolio, it basically took you 4 to 6 years to get back to even. And so you need to have that perspective on market recoveries. Now, we've had some, right? The COVID bear market was a flash in the pan. It was down 30%. In 6 weeks, we were back to where we were. So it does happen that way. Corrections, we have a 20%, 10% correction, and, within a couple of weeks, we can be back up. So markets recover. And then we need to have a written plan, because that will help us reduce the emotional decision-making that we're trying to do. Having that written plan that we can go back and look at is a huge deal. And then bucket planning, putting your different accounts in buckets. This is the bucket I'm going to draw from day one retirement until day 10 of retirement. Then I'm going to go to this bucket. So having the bucket approach can really help us plan out how we're going to use the income, and lets us put part of it, that last bucket we're not going to touch. If it has ups and downs, it doesn't really matter, because we don't plan on using that bucket anyway, except for emergencies and to leave to our beneficiaries. So that's part of the planning process there.
You said bucket planning. I thought we were adding to our bucket list. That's that meant. All right, let's address something that keeps many investors up at night: the fear that this time the market won't recover the way it has historically. So, Philip, how can investors balance learning from history with preparing for unprecedented events?
Well, I think that one thing, we diversify beyond traditional assets. If we look at some of the other models out there, when it comes to endowments and those type of things, how do they invest their money? They use some non-traditional assets to help when the market gets a little rough. Stress testing. I mentioned this earlier. Stress testing for various scenarios, taking your current portfolio and looking at what would have happened in 2008 if I had this current portfolio right now. Gives you some sense of okay, I can handle that, or no, I can't. We need to make changes. A big thing is this, Stephanie, you need to focus on what you can control. Tax strategies, Social Security optimizations, diversification, and then maintain flexibility to adapt. That's huge. We got to be flexible to be able to make changes. All of this wrapped up is our core retirement design. I'd love to sit down with you, talk to you about it, see if we can help you develop the retirement plan that's going to give you that retirement you always dreamed of. Give me a call at 863-877-1188, 863-877-1188.
And you can also text VISIT to that same number and contact Philip at Statler Financial Services, 863-877-1188, and get in for your complimentary visit. Now, we've covered a lot of ground today about preparing for market volatility. For listeners who are realizing they may not be as prepared as they should be, what kind of comprehensive portfolio review process do you use to address volatility vulnerabilities?
That's a lot of these.
There's a lot.
Yes. Again, the first component of our core retirement design is really identifying and measuring the risk you have in your current portfolio. And that's going to give us, based on that number, we will know how volatile your portfolio could be. And so from there, we have kind of that view of here's what it looks like. Here's what it would look like in 2008. What do we want to do about it? Are you comfortable here? If not, here's some suggested changes we might want to make to make sure that we're okay on that front. It's planning. If you have a plan in place and the markets are going to go up and down, or maybe they go down and up, but they're going to be volatile. And if you're ready for that and you're mentally prepared for it, then you can weather those storms. And having that plan in place is a big part of it, Stephanie.
And, every investor situation is unique. We talk about that all the time on this show. So how can you create a customized volatility preparation strategies that align with each client's specific circumstances?
You're right. Everybody comes in with a different set of assets. They all have different goals. They have different concerns about what volatility looks like in their life. And so it is, again, and I feel like a broken record sometimes. It's putting together that plan, having that plan in place that will, really allow you to invest properly, understanding the amount of risk that you need to have in your portfolio to grow, but yet the amount of risk you need to be comfortable with. And I think that's really the bottom line is getting folks comfortable with the risk. And some people honestly never get comfortable with the risk. I can't tell you, I've got several clients that will say, I don't like the market. I know you do. I don't really necessarily like the market, but it's a tool that we need to use. And they trust that we are doing what's in their best interests, which is why we're meeting with them, why we're making changes to portfolios and making sure that they're in the best possible position they can be in. And that's all part of the process. You have to meet with people. You have to assess their fears, walk them through it so they understand where they are, and let them ask questions. And the questions they ask are huge, and being able to educate them on why it's important, it is a big part of what we do. And it's part of what we like to do, is we want our clients educated about why they are in what they're in, why we're using these tools in these certain ways to get them to where they need to be. And that's what it's all about, helping people be comfortable in retirement. I'd love to help you. Give us a call at 863-877-1188. That's 863-877-1188.
And that's what I love about you at Statler Financial, Philip. You let people go in, you talk to them, you don't talk at them, you help them understand, and if they have questions, you are happy to answer them. So please give him a call for a sit-down, a free consultation, 863-877-1188. And the Statler Financial Radio Show will be right back.
Surprise parties can be fun. Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Philip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Philip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Philip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit StatlerFinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor.
Sounds like the mailman's here.
It's time to answer questions from the Statler Financial Mailbag.
Welcome back to the Statler Financial Radio Show with Philip Statler is with me right now. Over 2 decades of experience in financial services. I think that's terrific. And we are kind of getting into the fun stuff here with the mailbag questions. I love these, Philip. These are a lot of fun and some really good questions from the listeners as well. So let's go ahead and get started on this. Our first question is from Jean from Sebring. Jean asks, I'm still quite a few years away from retirement, but I have no idea what my savings target should be. How much might I need to save so I can have a comfortable retirement? That's a common question, isn't it? A lot of people are wondering that.
It is. It's a very common question. We talk about a lot on the show, but it's the wrong question, right? So we need to look at it from a different perspective because we don't know how much you need until we know how much you're going to spend, right? So the key is spending. What does your spending budget look like in retirement? And that's the key. And nobody likes a budget. I get that. I don't like it either.
Horrid B word, yeah.
That's right. Nobody likes that word. But you have to have an idea of what you're going to be spending in retirement. Whether that's I need a new boat because I want to go fishing all the time, or hey, I'm playing golf like it's my job. I have a client that did that, right? They play golf 5 days a week. That was their job. They took the weekends off. And so, so that's the first thing to look at is how much money am I going to need for spending on an annual basis? And once I get that number, then I can help you figure out how much you need to have in your bucket at retirement to pay for all the spending. So that's the key, Gene, is tell me how much you're going to need to spend on an annual basis. Then I can tell you what you might need to have saved for a comfortable retirement.
We are listening to the Statler Financial Radio Show now. We'd love you to call Philip and ask him any kind of question you like, or you can even text the word visit to go talk to him and have your free consultation at 863-877-1188. That number again is 863-877-1188. And I love the fact that you are right here in Sebring, Florida, and people listening now, they're not listening to somebody across the United States. You're right here in their own backyard. And I have Bill from Lake Placid. Question from him. He says, I think I have a pretty good handle on our financial retirement, but I'm worried that I'm missing something. Do you have some sort of checklist or to-do list to help make sure I'm not forgetting anything?
I wish I did. I did at one time, and it kind of got obsolete, and I never revised it and put it back together. But I'd love to sit down with you and we can go through where you are and see if there's some things you can tweak, or some things that maybe you can do to put yourself in a better position. I don't have a problem with that, just to make sure that, that you're doing what you need to do and are on the right track. A lot of folks, though, when they hit that retirement stage, they're ready to hand that plan off to somebody else, right? Because, well, you're retired to quit working, not to have to keep an eye on, your finances and your portfolios and make adjustments and, those type of things. And so I'd love to sit down with you and make sure that you're on the right path, to making sure that you're going the right direction, have an income plan that's really going to provide the income you need throughout your lifetime. And just make sure that you're going to pay the least amount of taxes possible. A lot of people, they'll put together a financial plan, an income plan, but they forget about the tax aspect of retirement.
That's a biggie for sure. Give Philip a call, 863-877-1188. That number again is 863-877-1188. These questions are from you, the listener, folks that are getting ready to retire or maybe already in retirement. Jeff from Sebring wants to know, if I'm retiring in the next 5 years or so, is it more important to max out my contributions to my retirement accounts, or should I focus more on building up my emergency fund? Really good question.
That is a good question. So I think you have to look at it in two ways. If you cannot do both, ideally you should do both, right? You should max out your contributions to your retirement plan and build up your emergency fund. Now, the question is, how much do you think your emergency fund needs to be? My opinion, and my opinion only, is I think that in retirement, you should have an emergency fund of somewhere around $25,000, no more than $50,000. There's no reason to have more than $50,000 sitting in a bank account somewhere. So that's kind of my criteria that I look at. And so if you're not there yet, I would probably start splitting them, right? Splitting them from your retirement accounts, half of it into your emergency fund, and let's see in the next 5 years if we can't get to at least $25,000 in the emergency fund. Once you do, then you flip it, start putting everything in the retirement account so that you've got the most you need there. And then it's a process, Jeff, of putting together an income plan to make sure that the amount you have in your retirement accounts is going to be enough to get you through retirement. And so that's, I think that would be a good goal to accomplish. If you can, next 5 years, end up with $25,000 in an emergency fund and put as much as you can into your retirement accounts. Building both of them up would be beneficial for you to retire in the next 5 years. Now, I don't know how old you're going to be in 5 years, but the other thing that you need to look at is, when do you take Social Security? If you're not going to be 67 yet, then maybe we don't want to take our Social Security yet. I mean, that's another area of planning when we do our income planning, is looking at when should you take your Social Security? What does it look like if I wait? And looking at those key aspects of income planning process is making sure that we're using our money the best way possible. And Social Security is a big deal. It's a big part of our retirement income. And again, that's part of our core retirement design, the income plan portion, is we look at the income planning, our pensions, our Social Security. How do those things all fit together to produce the income we're going to need in retirement? To get started, it's a simple phone call. Give us a call at 863-877-1188. That's 863-877-1188. I'd love to spend 30 minutes with you on the phone, making sure you're making the right choices when it comes to your retirement. That number one more time, 863-877-1188.
So after that initial conversation on the phone, and if they do decide to become a client, or if they just want to come in and visit a little more with you, what do they expect? What can folks expect when they come and talk to you?
So after the phone call, if it looks like there's some way or somehow we can help them, then we'll have them come in and go through our core retirement design process. And the first part of that process is a project where we put together a risk assessment of their current portfolio. We put together a tax plan to make sure that we can convert things to a Roth IRA, and making sure that we're being very conservative on our numbers to make sure that we make that conversion and pay the least amount of taxes possible. And then the third leg is putting together that income plan. So we put together an income plan that says, hey, look, here, based on where you are today, here's how much money it looks like you should be able to take out or have to spend, including your Social Security and your pension. Here's the number that you should be able to spend in retirement. And that gives you that confidence to know that you're not going to run out of money and be in good shape throughout retirement.
All right. Well, hey, I appreciate it. And it was great talking to you today, Philip. Thank you so much.
All right, Stephanie, thank you very much. And I look forward to next week.
Sounds good. And don't forget, you can give him a call, 863-877-1188. That's 863-877-1188. Thanks again. And we will talk to you next week on the Statler Financial Radio Show.
Advisory services offered through Second Half Financial Partners, LLC, a SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. This radio show is a paid placement.